Looks like we're doing it live, guys. Medical Properties Trust earnings. Hate to say I told you so, but guess what? It wasn't a disaster. We actually have some fun stuff in the press release. An update to their litigation. So, on March 30th, Medical Properties Trust sued the short seller, Viceroy Research LLC, in federal court for defamation and related wrongs arising from the campaign of malicious falsehoods calculated to reap profits for themselves at the expense of Medical Properties Trust and its shareholders. The lawsuit is available at the link, but the interesting part is they filed motions, Viceroy did, to dismiss the claims before they reach a jury, arguing they cannot be sustained because the comments and reports and articles, etc., that they put out were not meant to be facts but opinions, and commentary dominated by colorful and hyperbolic language. So basically they're saying that, oh yeah, all that stuff we said about how Medical Properties Trust is, basically a crappy company that's, playing games with their financials and misleading their shareholders, etc., etc. They're saying that, although that wasn't, we weren't trying to say that was a fact. That was just like our opinion, bro, as a defense to this defamation lawsuit. So, personally, I think it's a baller move by MPW to file suit against them for basically the BS that they... I mean, think about it like this. You're a short seller. You decide to sell a bunch of shares short in this company, and then you suddenly publish a bunch of really, really negative press about them, how they, misrepresent their financials, etc. And then people see those, they freak out, and they sell, you profit, and what do you know? You're all of a sudden doing quite well with the drop in share price. Now, as far as the financial results for MPW, we have pretty much a change in equity, slight drop, which, with the concerns with their number 3 tenant not paying all their rent, etc., you would expect to see, a little bit of a dip in their financials. Now, the interesting part, is where it comes to the FFO, which is where they pay their dividends from, okay? So, we've got FFO of 31 cents, normalized FFO of 37 cents, adjusted FFO of 30 cents. So, essentially, the dividend's 29 cents. All of these numbers are above 29 cents. No matter how you calculate their FFO, the dividend is actually covered, okay? So, basically, that's a wrap as far as, them needing to cut the dividend imminently, right? As long as they can keep these FFO numbers, at this level or higher, there shouldn't be a need to cut this dividend. In which case, the people saying that the dividend's in imminent danger, the dividend's a scam, etc., that's kind of all out the window here. So, anybody on wanting to chat? So there actually was a shareholders letter about the lawsuit and their counterclaims to the accusations from Viceroy. And all the articles are kind of covering it in lockstep now. I wonder if they would all be making the same points if this earnings had been like a bloodbath for MPW. But regardless, the basic points in the letter were MPW has a proven underwriting track record, and this is, what MPW. I don't think you can really compare all right, we got some stream issues going on here. A lot of drop frames. Genuinely, the dropped frames annoy me. Okay. We're back up to a somewhat reasonable bit rate. Hopefully we can resume. Okay, so the shareholders letter basically outlines the ways in which the short seller's claims have been, false. So the infrastructure thing, I was saying I had a commenter compare these to shopping malls, right? So absolute just insanity to say that this high quality real estate is basically the same as a shopping mall. This is essential infrastructure for the communities. Basically, when they're going to either build or buy a healthcare facility, they make sure that it's essentially considered important infrastructure to the community and would be necessary to meet that local area's healthcare needs, right? So, point number 2, well-diversified portfolio that continues to perform well. That's kind of self-explanatory. Lease structures to reduce tenant bankruptcy risk. Follows generally accepted accounting principles for its accounting rules. And impossible to round trip revenue to third parties. So basically they accuse them of buying assets from their own tenants who then paid the rent back to MPW. And they then point out a bunch of instances where that was actually not possible in transactions that they did with different tenants. But suffice it to say, MPW has sort of clapped back on this whole lawsuit, with this whole lawsuit that they've done. And I hope, honestly, that they do punish this short selling firm, because I don't have a problem necessarily with short selling in general. but I do think that if you're going to publish negative information about a company that you're sold short in, that it should at the least need to be factual and not hyperbolic, not exaggerated. You basically can't, you shouldn't be making up things to basically make your own story up about why your short position is good and why other people should sell so that you make money. It's basically the same in reverse of people who go, buy up a bunch of, penny stocks and then go on, social media and pump them up, or buy junky random crypto or NFT things or whatever and go on, and blast out how it's going to the moon, right? It's the same thing in reverse. When you short a stock and then do basically a smear campaign about why their management is, basically being dishonest in their accounting, et cetera, when that may or may not be true. And in this case, Medical Properties Trust contends that it's not true. Oh, now, one thing I do want to get into as well is the valuation. Also, if anybody is live with me at the moment, I would definitely appreciate if you would hop into the chat with me real quick. But if not, no biggie. So you don't generally use a discounted free cash flow valuation for a REIT. And here's why. If you did, and then you added the balance sheet, you would have literally a $30 stock here. Now, I don't think MPW is worth $30. I think it's a $14 or $15 stock. So I think you either have to look at the tangible book value or a multiple of FFO. So I've been saying all along, I think this is a $14 or $15 per share company. And I've been basing that on the balance sheet, so the book value. How small of a position are we talking about, Johnny? Oh, I mean, hey, that's that's a good that'd be a good chunk for a lot of people. So the tangible book value is going to be based off of the stockholders' equity, and then subtracting anything attributable to preferred stock, goodwill, or intangible assets. Now, in the case of MPW, this is basically just the number, because the majority of, their assets, it's just they're all basically tangible, What's your basis? My average is about 10 per share, something like that. So a lot of headlines about this lawsuit. Got in after div pay last month. I mean, hey, 778. I mean, you're doing pretty well already. That's good. Yeah, I mean, I'm definitely not planning on selling anytime soon. I told the people in Discord, tangible book values over $14 per share. I'm not planning on doing any selling when it's below that, really. There would be no point. And frankly, I think for the moment, I don't think we're looking at any dividend cuts. The funds from operations came in above what the dividend is, so it's covered. And honestly, I think they will do whatever they can to keep it at that level and not cut that dividend. Let me see if there was anything else interesting in their press release. Probably not. I mean, I think the funds from operations and the litigation update were the most interesting bits on this. But I mean, you can look back to, when I first started covering this, right? I was saying it was undervalued when it was still over that $10 a share. And I think, the $8.45 billion in equity compared to the $5 billion market cap kind of bears that out. Let's see. Yeah, don't think it's squeezing or anything, but it's nice to see it pop a little bit. Makes my portfolio look a little bit less red, I don't think we're moonwalking or anything just yet, but I think a lot of people may have been expecting, if today's news was good, that short positions might buy to close, and we might see more than what we've got here today. And earlier it was up over 9%. So yeah, I'm not really sure, about any of the day-to-day price movements, but I am glad that when the earnings was, relatively good, that people, kind of maybe came back to the stock a little bit. The thing is, when it comes to short squeezes, I think you need retail enthusiasm that I don't think a fundamental value play like this will ever get the kind of enthusiasm like an AMC or a GameStop did. It just doesn't have the same story to it, It's not it's not apish enough, I think, for it to get picked up the way those companies did, if that makes sense. People, I think, I don't know, for some reason they're more attracted to the I mean, I saw more people talking about Bed Bath & Beyond being another short squeeze than this. And there were points in time where the short interest in this was even higher, but Bed Bath & Beyond was actively circling the drain towards bankruptcy, where this this particular company happens to have a really, really good balance sheet with high quality assets, funds from operations that cover a very substantial dividend payout that they consistently make to their shareholders, and isn't anywhere near the point of bankruptcy, insolvency, and it's not even at the point of having a dividend cut yet. So I don't understand why there would be so much buzz about a Bed Bath & Beyond squeeze when you've got similar short interest in something like this, and even if it doesn't squeeze, at least it's not going to go to zero because of a freaking bankruptcy, right? Now, I've been saying Bed Bath & Beyond bankruptcy since the first time I even looked at their financials, which, granted, that was, maybe just a couple months ago, a few weeks ago, I don't know. But still, it's very clear when you look at the financials of Bed Bath & Beyond, it's moving all the wrong direction. And then you're trying to make a squeeze happen when the company is actively looking to dilute shareholders just to basically keep the doors open. The only way they could bring in enough money to keep the doors open was by just selling more shares on the open market. That's not a business strategy, Medical Properties Trust, on the other hand, they are selling 11 properties in Australia and using the money to pay off, the debt attached to those properties. And, they're getting pretty close to what the value was as represented on their balance sheet. So, I feel that their book value is a pretty reliable measure of the value of the business on that basis. These are not shopping malls. These are essential medical infrastructure, essentially. And I don't know. I mean, a good example of, I guess, why I'm interested in it right now, right? So the last time MPW fell, this hard for, different reasons, but similar kind of fall. 2009, it was $3.50 a share, right? I bet if you look back at what people were saying about this company back in 2009 at that price, people were probably saying a lot of negative things and about how, oh, you don't want to be in this. It sucks. Well, even with the current drop today, if you had gotten in when it was $3.50 a share and you collected your dividends all the way along here, you might not even really be feeling too bad about this drop right now, because you would have had 13 or 14 years worth of dividends that you collected all along the way. I don't think they ever stopped paying a dividend anywhere. Now, they did end up having to cut it for a while in here, but they built it back up and it's higher than it was previously at this point. So I don't want to hear the whole, oh my gosh, they're going to zero, they're going to cut their dividend, it's going to be the end of the world. We've had doom and gloom in this REIT before. It's just, nobody looks at what was going on with it in 2009. Everybody's focused on, what's happened maybe from 2020 to now, But if you zoom out, it's like, hey, we've had, I guess, a lot of fear and panic and whatever around this type of asset in the past. And what happened when it was at these ridiculous all-time lows because of, and maybe, just maybe, we'll see a similar thing repeat, right? Certainly below the value of their assets, right? So I'll say this. In 2009, it didn't necessarily, it doesn't look like it was, necessarily like a short squeeze or anything. Son of